We detected unusual trades worth at least $3.3 million on Tempest AI stock, ticker symbol TEM. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are now trading Tempest AI stock. Are they bullish and buying or bearish and selling, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street? Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into our analysis and then show our trading strategy for Tempest AI. Now, notice here on the charts, this candle here where the stock gapped up was January 21st. And why did it gap up? Well, because there was some news that was released about Tempest AI. Specifically, Nancy Pelosi was buying these call options and it started to trade up higher. You can see these 20 strike call options, 50 contracts, January 2026. And so let's confirm it because this was the official document. We can see down over here, we have her disclosure of Tempest AI right over here. And you can see that these 50 call options with a strike price of $20 strike price here. Expiration date, January 16, 2026. Now you can see also the value of this trade is essentially less than $100,000. So keep that in mind. Now, if you've been following our channel, you know that we analyze trades that are worth a lot more, sometimes into the millions. And so keep that in perspective. And we can actually see her trade over here. If we look at the option chain for these January 16 options, we can see here at the 20 strike calls right here, there's an open interest of 2,282 contracts. So we know 50 of these contracts belongs to Nancy Pelosi. So not a lot of contracts, relatively speaking, if there are 2,282 already. But it is still unusual because she may have some insights that we do not have about Tempest AI. And so let's take a look at the trade that happened today that was quite unusual. We can see here on the options time and sales tape that it doesn't quite show up here. But if we filter out the April 17 options, we can now see a lot of these call options that were being bought, specifically the 90 strike calls. And we can see the price that was being paid, $330 each. And so if we take a deeper look at the option chain to find out how many contracts were being traded for these April 17s, we can see here that at the 90 strike calls, there was at least 10,000 contracts being traded. And they were clearly new opening trades since there was only 710 open interest. And so if you take the 330 times 10,000 contracts, you can see that this is well over $3.3 million already. But keep in mind, this is still a higher risk trade in comparison to the trades that we share on our website. If you want lower risk, higher chance of profit trades, then make sure to go to our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
We will put a link to our website at the top here, where you can also learn trading strategies to further reduce risk while increasing the chance of profit. Now, having said that, one of the risks with this trade is you can see here on the charts that we are currently trading very near a resistance level that has been rejected twice already. And so this elevates the level of risk as well as the earnings that is coming up. And so we traded this, but we use position sizing to manage our risk. You can see our position over here. POS stands for position, green means buy, and red means sell. Because we bought the 90 strike calls and we sold the 100 strike calls. And so we are in this vertical call spread that costs $130 of debit each. And so when we analyze our trade, you can see here on the risk profile profit loss graph where the x-axis represents the share price of the stock, which is currently trading at about $70 a share, and the y-axis is the profit loss. Note the zero break-even line over here. And so when the purple line and the blue line is below it, it is a negative loss. The purple line represents the current date, whereas the blue line represents the expiration date. And so you can see that at expiration, the max profit on this trade is over here, which shows up in this area here. And you can see it's $870 is the max profit on this trade. And so the risk to reward ratio on this trade is 870, which is the reward, divided by the risk, which is the cost of the trade, 130. We have a ratio of 6.69, which means we could potentially make 669% profit on this trade. So we have a very favorable risk to reward ratio here, where we don't have to put a lot of capital into this trade to be able to make a significant amount in relation to our initial investment. But keep in mind the risk on this trade. You can see here for our Greeks, we have a negative theta decay here. So as time goes on, these options will lose value. And that is why the purple line drops down below the break-even point, shifts all the way over here, where the stock has to trade above $91.25 for this trade to be profitable at expiration. And so be aware of the risk with trading options. And that is why we use position sizing to manage our risk, because we put most of our capital in the lower risk, higher probability of profit trades that we share on our website. If you are interested in getting access to those, we'll put a link at the top here. Let us know in the comments below. Do you think Tempest AI will make higher highs, breaking above this prior resistance level? Or do you think it will crash back down? As usual, please hit the like button, subscribe if you haven't. Take care and have a wonderful day.